You were nodding at Mr. Agner's comments. Anything you want to elaborate on the competition for capital that we see now and the evolution to attract capital to certain markets within the Middle East as a result of the openness on the business front?
Well, the sovereign wealth funds, I think, not only in the Middle East but elsewhere, have been unequivocally good, I think, for making the capital markets, making the investment opportunities more sophisticated. I think they've helped. They've done it in combination also, don't forget, with the large pension funds. The large pension funds over the past few years have followed the trend or been consistent with what the sovereign wealth funds about being longer term in their investments, upping their asset allocation to what I call the hard assets, real estate, infrastructure, private equity. But at the same time, I think coming back, don't forget, certain governments have already reacted to this wall of capital. Brazil have taken measures to ration or stabilise the capital inflows, and that, and I'm old enough to remember, that's not dissimilar to what happened in the late 70s and the early 80s in a number of countries where foreign investment rules were a very major political and economic issue. And I think what's happened here in the Kingdom has been about right. You can argue about the pace of change, but by and large, the measured approach to make sure that there are clear guidelines, a clear understanding of what the market will be like and the regulations are like, to me is a very big step forward for the Kingdom and hopefully for the rest of the Middle East in making it attractive for a whole range of investors from elsewhere.
Good. On the flight over, I had the chance to see the sequel to the Wall Street movie and the famous character of Gordon Gekko. And there's a phenomenal quote that I had to take a little 5x7 card and write it down, which was, greed is not only good, but it's legal now after this crisis. So what lesson did we learn from the 2007-2008 crisis? Have the rules really changed, Arif Naqvi?
Well, they haven't. They haven't yet changed, and that was the hypothesis that I was articulating earlier. They haven't yet changed, and they need to change. There's no question about it. And I think I've said this on many an occasion in public forums, that we were all guilty of greed. Gordon Gekko just said it nicely, okay? We were all guilty of greed. And that is why I have this issue that I keep bringing up around sovereign wealth funds. And I think Saib actually put his finger on the pulse there when he said that there are economies here that are not only doing well, but have done amazingly innovative things in the last few years. But at the same time, their sovereign wealth funds were guilty of greed as well. They started thinking of themselves as being private sector investors. So they were going out and buying buildings on Wall Street and buying companies in the region and competing with the private sector. I think the role of the sovereign wealth funds must always be to look after wealth generation for the next generation and wealth preservation. So for that, the absence of the project finance market in infrastructure projects is a logical area for sovereign wealth funds to step into, providing 20 and 30-year money into large infrastructure projects. I think that the ability of policymakers to realign their thinking away from greed into wealth preservation and into the continuation of the systemic processes is the right way forward.
Good. Helmut Schuessler, I'd like to get your thoughts on if we can predict the next crisis. Now, what I mean here is in the 1970s, late 1970s, all that capital flowing into Latin America, and it had ended in tears. In the 1980s, late 80s, all that capital flowing into Southeast Asia, and it ended in tears. What makes us believe in 2011, with nearly $1 trillion flooding into emerging markets, it won't end the same way?
Well, I'm afraid nothing tells us that it will be any different. I believe that as capital market actors, we don't learn, and unless heavy regulation is in our way, we will commit the same crimes and mistakes that we've committed in the past. I think this is a safe assumption because greed will not go away. And there will always be times when people just throw everything overboard because they see that there's a great deal to be made. And in the end, in the capital markets, we're all deal makers. We do deals when we can. And as long as it's legal, and it's there, and it's available, and it's profitable, and we think it's going to be profitable for our investors and ourselves, we'll do it. this is what this business is built upon. This is the nature of capitalism, and unfortunately, as long as we don't abolish that, it will be there. So I'm afraid that all that money that is now, this wall of money going into China and India and other of the emerging markets, will have very similar effects. I can't say when, probably nobody can, but it has to be expected.
Unless governance changes.
Unless governance changes, I think regulation in the end of the day is the only thing that can make us stand down.
Okay, well, there's a number of hands going up here. Arif, I don't hear you completely clearly in this in. If the regulation is correct, but there's a major pushback for regulation. So are we being too timid getting the universal banks under order as we move forward to 2011? I'll go to Arif, and I want Victor and Saab Aigner on this as well.
I think so. I think, as a practitioner in the financial markets, I have to say I like being given a set of rules by which to operate. And then innovation comes in deal making, innovation comes in transactions and areas in which to operate. I fear that the global banking community was not stopped hard enough, if you like. And what I mean by that is that we learned, or we saw lessons being shown in the 2008 crisis. The global community, especially the G20 governments, in my opinion, should have done a bit more to legislate, regulate, and create more global bodies to watch the trade flows, to watch the banking flows. It hasn't been done, and like you just said, it is an impending crisis waiting to happen all over again. Where are most people expecting it to happen? In currencies, in sovereigns, and so on. I think corporates cannot be immune to it. It may well happen there as well. So we really must focus on a governance system which is better than the governance system we had. Because the world tomorrow is going to be a very different world from the world that we've come from. And it needs to encompass stakeholders. It doesn't need to think of shareholders, profit, and greed.
Saab Aigner, we're almost behind the 8 ball already because we've been debating this since the start of the crisis. What are the right rules under Basel II going to Basel III to regulate our banks? Are we already behind the curveball in regulating correctly to get capital into the Middle East and other markets?
I think we should start off by saying that there's been a failure of regulation, and that failure of regulation was in the West. It wasn't in the Middle East, it wasn't in Asia, and I think it's all well and good lecturing on good regulation from the West, but that is where it failed. And I think the failure was understanding systemic risk, understanding and decimating the information flows. And this is, I think, where the focus perhaps should be more on. I understand, of course, there's been a big redress of the bonus culture, of short-term bonuses versus long-term bonuses. We saw Morgan Stanley's announcement recently that 60% will be in deferred bonuses. But the point is to understand that generally you need to instill confidence and trust in regulation. There has been a failure. It's been worked at. You don't want to over-regulate either and stifle growth. And this is where you need to create a balance. In the region, what has happened, the crisis came as a shock. So the question is, have they been able to deal with the crisis from all sorts of things, whether it's communications, which in itself is confidence and trust, or effectively have the central banks as the prime regulator, invariably the prime regulator with the ministries of finance, being able to deal with these crises in such a, that's the first crisis for the region in such a scale and manner.
Great. So excellent points brought up, which we'll come back to. Victor Chu, you want to weigh in with the view from the East here? Saab makes a very good point. Even in the global media, we had this tendency to say the global economic crisis. This is a global economic crisis from the perspective from New York and from London, but quite the contrary from Beijing or Shanghai.
Yes, the issues, of course, are very complex. The longer we drag on, the easier it is for the political will to disappear. So I think we have to act, quickly and not lose the opportunity to really get ourselves, in shape.
It's not already too late in this process.
I don't think it's too late, but I think we need to get the momentum going. My second point is we need relevant and effective regulation. And a lot of the regulation is a backlash. It's a swing of the pendulum. It goes to kill entrepreneurship. For example, the the definition of trade financing and how much capital you need to provide for trade financing will almost certainly kill SME financing. There are a lot of issues like that. My third issue is, as my learned friend said, this time around, I think the East, if I can put it more generally, should have a more effective voice on the table. And I'm very pleased that China and Saudi Arabia, being members of the G20, will be taking a very prominent role in the discussion of the reform of the global financial architecture.
Good. I'd like to ask some of our experts on the panel here to reflect on the lessons learned from Dubai. It's been just the better part of a year since the crisis kind of unfolded, and I, as Mr. Eigner knows, did an interview with Sheikh Mohammed bin Rashid in June of last year when he said we just need to get through the crisis, be very methodical about how we do this and how to communicate how we've got into the crisis and how we plan to work our way out of it. So it's been the better part of a year since Dubai. What were the lessons learned from the Dubai crisis and how we got through it for the region in terms of character building, in terms of capital building for the future? Arif?
I knew you'd ask me. Look, we've learned lessons, obviously. Dubai was not immune to the crisis, and when it happened, the real estate market certainly unraveled very quickly, which in turn led to banking issues as well. I'm not going to go into the reasons, and I'm not going to talk about the fact that it takes two to tango, both the lender and the borrower. But what Dubai has done is it has systematically worked its way through the issues and gone through a process of rescheduling with banks. Are we out of the woods yet? I would say partially and partially not. I don't think Dubai should lose its focus on governance. At the same time, I don't think Dubai should rechannel its strategy too much. And what I mean by that is if you look at the infrastructure of Dubai and the way it has been built, the dividends from that are going to pay for Dubai for the next 50 years. The momentum is already there. If you go to Dubai, the hotels are full, the airlines are full, the shopping malls are full. So the confidence is coming back, but the impact of the fall of the real estate was too large to wipe out in a year or two. It'll take a bit of time. I think it'll come to a rational level. And the lessons that have been learned very aggressively in Dubai. So I think there is a government in place today and a hierarchy in the system that accepts the mistakes, has learned from it, and moves on. I just hope that the focus that there was on governance and reform pre-crisis continues to be exactly the same post-crisis, because that is what attracts investment and confidence.
John Fraser, it'd be good to hear your thoughts on this, looking at it as an international banker. It rattled markets at the end of 2009 in a very large scale, the crisis in Dubai. A year later, how did they work through the process in terms of confidence rebuilding and capital rebuilding?
Well, starting in modern times with the South Sea bubble, we've always had bubbles. I mean, Dubai was a classic modern bubble. And I think what was interesting was the ease with which the markets went through it. And I think that was a compliment to the resilience of the capital markets. I don't understand fully how the Dubai rulers have digested this, but I think for anybody it's a lesson that asset price inflation is inflation, just as much as consumer price inflation. And every casual observation of the Dubai economy over the last 4 to 5 years showed that this was a bubble building. So the lesson out of it for me is for anybody, whether it be in the Middle East or elsewhere, when something is growing too quickly, be aware, be painfully aware that it might end in tragedy. As our friend said, that there are benefits which will be long-lasting, and we've often seen that right around the world, that infrastructure that comes out of it will provide benefits for decades to come. So to me, it was really a bit of a plus in terms of the resilience of the capital markets, but it's a warning sign to others.
Yes, I like to say that the economic fundamentals and the strategic fundamentals of Dubai remains, and it will come back. The real lesson that we have learned is really what is and what is not sovereign risk. And I think a lot of bankers, our friends in the banking world, have taken some, humble pie in this one.
They were making assumptions that they were all covered.
Yes, and I think now with Dubai, we will have a lot more caution, a lot more clarity in that definition. And the same goes to sovereign wealth funds, if I may say so. I think today there are two types of sovereign wealth funds. One is to invest in the long-term future of a country's natural reserves to pay for the day that the natural reserve runs out, a la the Norwegian type of funds. And there are so-called sovereign wealth funds, which are effectively government-owned investment companies. And they invest like everybody else. They look for maximized shareholders' return. So their horizon, their strategic angles could be different. So I think, again, we need to differentiate who are we talking about and really understand what they're coming from. But the unique contribution of the sovereign wealth funds in the last global crisis was that they were the last pillar of stability.
In China and in the Middle East, I would imagine.
Yes, absolutely, absolutely. And of course, in China, our sovereign wealth fund is a new phenomenon. Our sovereign wealth fund is less than a few years old. So, you know, we're still learning from other people's experience and hopefully take the best out of other people's benchmarks and do as good a job as possible.
Okay, very good. One final question before I take to the floor here for about 10 minutes of questions. Sabi, it goes back to your point of corporate governance and transparency. We have some models, picking up on Victor's point here. Take the Abu Dhabi model. They have ADIA, the largest sovereign fund in the world, and they've set up another 7 sovereign funds, but more targeted at development. Does that help define transparency and help define governance for the future, knowing what the sovereign wealth is going to be doing in the Middle East?
I think we talk about different degrees of transparency. I think when I talk about transparency in sovereign wealth funds, I think I talk about the Norwegian model, or I talk about different types of model. And I think they will themselves, the leadership in the region itself, will adopt ultimately these type of models, because you will need to explain how the investments are being done, where they're going, and explain the short, medium, long-term plans. And I see this happening. It will happen. It's a matter of time. In Asia, there are very good corporate governance models. Singapore is an excellent example. Hong Kong has very good examples. And I think there are examples in emerging markets around the world which the region can look at. And you know, if you have a model that is not right, you work at it. But they are working on them, and I think that's the important thing. I believe that there are basic issues on governance and regulations and independence which are almost non-negotiable. I agree that every country has its own set, some are cultural, but there are certain basic rules, and everyone has to accept these basic rules. And I think the region is moving towards this. And I see Abu Dhabi and Dubai and Bahrain and Saudi and Qatar and others trying to see what is the best model for them. But that they should have one, I think, you know, markets will almost dictate these. And I think going back to Victor's point, the clear distinction between private, public, sovereign, not sovereign, notwithstanding structures and announcements, there will be more pressure. People, you know, once bitten, twice shy, you know, bankers too. There will be in credit and other things, there will be much tougher questions on why are you providing liquidity, credit, capital, and at what cost?
Good. Sorry, I have one more question, which is a bit more sensitive, and I know there's a panel dealing with this later at the GCF about social networking, but there's a direct link on globalization, innovation, and openness, and the influence it has on attracting capital to a market. Honestly, are the leaders of the Middle East prepared for the technology revolution that's taking place and the social networking and the passing of information, which could have an influence on how fast they're willing to open up their economies?
Well, as we have heard before, I think the Middle East is a very fast adopter of the social networking phenomenon. And I wouldn't have any doubts on that front. And I believe in terms of the general openness and willingness to innovate, we're also seeing a lot of positive developments here. What I can only say from my point of view, being in the healthcare arena, there is a lot of demand for innovation, and people are extremely open to bring that innovation to their countries. And that's true for services, that's true for products, diagnostics, pharmaceuticals, devices, or even telemedicine, IT-based healthcare services and systems. So I believe that the whole region can make a tremendous leap forward in this industry by employing and deploying the latest technologies that are available, because also Western firms who've developed those technologies and products and services are very interested to go into a new market. And for them, this is a growth opportunity. So I believe that supply meets demand here. So we're going to see tremendous growth, and especially in the innovative sector of the market.
Okay. Wolf, you had your hand up.
Yes, I think openness and transparency is desperately needed. Predictability is also. But also as capitalist about an investor, two types of investors, as I see, and the conversation change in the boardroom, and how you deal with the risk and the need of capital. The investors that is hands-off, is a trader, likes transparency because they like to, on a second moment, change their investment and their allocation of capital. Then you have the investors who participate in the company, maybe sits on the board. Their point of view and their attitude to dealing with risk and the capital is very, very different. And I think the funds in the region can have two different roles here. One, are you a trader or are you a participant? And the conversation change how you look at risk and how you allocate. And transparency, how you relate to it, will be different.
Good. Anybody else want to jump in on my fairly provocative question of the gentleman here? Mr. Eigner?
Yeah,
it's a huge revolution in the way we're thinking in the Middle East. We should be honest about that. And the influence it's going to have on information flow. The most educated forces of the population, the youth population, they've been abroad, they've come back, they want opportunity, and they're getting restless. So this is not an issue that can go away, I would imagine, in this society.
Yeah, I agree, John, but I disagree in some parts, and we go back to parts of the region. I think in some parts of the region, the youth has embraced technology and information and has invariably embraced it for positive and good. You know, we keep thinking of a negative connotation, but I think there is also a very positive connotation. And in this part of the world and in this region of the world, they seem to culturally understand right from wrong. And we always think that, you know, the internet and information has a dangerous, predominant dangerous element. It has a dangerous one. But I think the youth, because they're better educated, they've matured enough to create these distinctions. I mean, obviously, the role of government in regulation of communication is very difficult and very controversial. And it is almost, you need to be careful not to become too prescriptive. So other than taking out fraud or criminal or, you know, dangerous elements in society, I think society has been quite good in this part of the world of self-regulating itself, right from wrong. And it doesn't mean in other parts it's not either. But the pressures are asking questions, you know. I think Arif said 350 million Arab speakers, predominantly Muslim. One of the many questions I see as an author is, why are there no Arab books? Why are there things not done in their own languages? This region has the lowest publishing in their own language in the world. Spain publishes more and translates more books in Spanish than all of the Arab world put together. And these are questions that will become more prevalent and dominant, particularly in a region, as Victor Chu said earlier. You know, 1,000 years ago, this was the translation movement. All the Greek philosophers were translated here. And it is in this part of the world that we in the West have learned about some of Greek philosophy translated. So these are cultural and social issues which the internet will push the envelope on, I feel.
Great.